There is so much value in studying the greats, especially the relevant ones that are great today. People like Warren Buffett. Like, how on earth did that man amass a net worth of $85 billion? It's incredible. It's an astounding figure. And the story goes all the way back to who he was as a child. Today, I want to explore with you some of the lessons and things I've picked up on from studying his life and how it's helped me become a better, wiser investor.
'Cause we're gonna be legends. What we're doing here ain't just scary. It's about to be legendary.
Warren Buffett is one of the wealthiest individuals alive today, and while he looks like a really nice old grandpa man, the reality is that he started his investing career at the age of 11. He had a very well-tuned mathematical mind. He loved to multiply, do basic math, and he loved to run numbers on companies. And I think I relate to him because a lot of what helped make such an impression on him was he was a paper boy. I was a paper boy before that, probably. I don't even know if that exists in the world today. I doubt it. But growing up, being a paper boy, it just taught me some basic elements of deliver value and then collect that money. And then I used that money and I invested it. And Warren Buffett, by the time the man really went to college at Columbia, he had already amassed a lot of experience in doing things like opening pinball machines around town in the barbers and collecting money that way. And he had experience with taking his paperboy money and he helped buy a 40-acre farm and leased it out, to a farmer and actually made great money on that piece of real estate. And then he got into Berkshire Hathaway, which at the time was like one of his worst investments that he turned around into one of his biggest success stories. So, ultimately, when you look at the life of Warren Buffett, what the man is doing is he has principles for investing in companies. And there's a couple of things that I think are worthy of extracting from his life. His book that he wrote, Snowball, I think does an incredible job helping us in the world understand who is Warren Buffett, how does he make decisions, and here's some of the things for you and I to get. Warren Buffett, what he would do is when he would work, he was such a frugal man that what he would do is he would take as much money as he could and instead of consuming it, he would actually invest it. So this really simple concept of pay yourself first. For example, in one of my earlier videos, I was showing you that if you make 10 units of money, how much of it are you actually able to set aside for you to invest with? If you can only save 10% to invest, that's a start. And it's definitely better than nothing. But Warren, he would actually live so frugally that the majority in time of what he made could actually go towards his investments. And the man has, I simply love his very straightforward approach to life and the obvious integrity and honesty that he carries, because I think those are really desirable qualities and they've helped shape so much of what people get out of looking to him as a mentor and a business leader. But the man would religiously pay himself, take his money, and invest it, and he would place it in many different companies. He had different reasons for why he would invest in different companies. There were certain types of companies he did like, certain types that he didn't like. But when I really felt a closeness to Warren Buffett was when I was directly competing with his hedge fund Blackstone during the 2009, 10, and 11 recession. After 2008 hit, we went out and we started buying real estate like crazy, thousands of homes. And we had an 18-month head start on Buffett before he came in. And in the papers, he said, buy single-family homes below the market and you'll win every single time, especially if you buy in the hot markets. In the markets that I was in, Phoenix and Vegas, he was there with me. Except that year that I bought, 2,000 homes, he bought 40,000 homes. And I swore the next time we have our next recession, I'm going to be there and I'm going to be buying as big or bigger than Buffett did because I know the homes he bought and I know how much money he's made on them. So the man just has a really sound philosophy of how he does business. In 1990, Warren Buffett actually became a billionaire for the very first time after Berkshire Hathaway went public and started actually selling off shares. And you look at going from $1 billion to now $84 billion net worth. Basically, he's just doing his principles over and over again. And I've thought for this video, what can I condense down? What are the real things that I've learned about Warren Buffett that I see him doing? Number one, he saves money and then he invests it. And then he educates and then he invests more. And then he educates and he reinvests. And it's basically a rinse and repeat cycle that when you talk with him or you hear him speak, it's always going to be how he's recently educated himself, and then he's applying the same basic math, and then he's at it again. So how are you investing money, and what do you expect your money to produce for you? Because Warren has a tendency to pick companies that are undervalued, that with a little bit of key management switch up can actually become behemoths and very successful. So he's an asymmetrical investor. This is, I think, what you and I need to pull from Warren Buffett, is that asymmetry means there's low downside and there's massive upside. 401ks and IRAs in the stock market do not have big upside. Like the S&P 500 averages just shy of 10%. And when you take your ups and downs out of it, it's actually significantly less. We as a people are not taught to invest. We're not even taught to set money really aside. What Warren's doing is he's following the principles of richest man in Babylon. He's living frugally, he's saving his money, he's investing it. And when he looks for a company, he's not looking for a 3 or 4% return. He's looking for a company that can double, triple, quadruple, and really has a history of doing something massive. How does that impact your strategy on investment? For me, it most certainly strengthens my approach to investing in real estate, because I found something that works and I would just do it over and over and over again. In fact, I buy a house just about every single day, but I'm never using my money. I'm never using my credit, but I am using my team of 200 experienced individuals. And that's also what Buffett does. He finds something that works and then he multiplies it and stays at it and does it over again and again and again over the long period of time. So I wanted to make this video today in hopes that it'll be a little bit helpful, enlightening on who is Warren Buffett. There is practical application in what the man's doing. Pay yourself first, invest the difference, continue educating, and then make sure you're making investments that have the real moonshot, the ability to get you where you really want to go in life. If you're not sure where to start or what that could look like, you could do the same kind of a real estate that me and Warren Buffett were doing back in 2008, the same kind of real estate that he's still up to and that I'm still up to. We were buying the best real estate in the country, and we still are today. It's all documented here in this book, The Straight Path to Real Estate Wealth. And this is a free copy from me to you. It's a gift, so you can get your hands on the way to do real estate in the most intelligent way possible and create a little game plan for yourself to make a few $1 million on the side during your working career. Do that, it sets you up for a different financial future. Thanks so much for watching. Make sure that you subscribe, and we'll see you on tomorrow's video.